Welcome to This is Supercritical, a podcast where experience, equity, and expertise converge to examine current trends in the cannabis industry. You can find all of our podcasts on your favorite streaming service and at supercritical.agency, your one-stop destination for all things cannabis. Hello, I'm Kerry Jordan, co-founder of Supercritical. Joining us on today's episode is Peter Su, Director of Specialty Banking at Hanover Bank. Peter also serves on the executive board of the Asian Cannabis Roundtable, the board of advisors for the Cannabis Summit, and for CTrust. In his free time, he writes for Rolling Stone Cannabis Culture Council. Peter, we're so grateful to have you join us today. Welcome to This is Supercritical.
Thank you so much. Thank you, Kerry. Thank you, Sparky. How you guys doing today?
Doing really well, thanks. How about yourself?
I'm okay. I'm still recovering from NJ BizCon, like I was telling you.
Yeah, you're just back from that at it. Well, I'd say let's get right to it then.
Sure.
We have a new administration coming in next month. How do you think that will play out for cannabis banking? And do you see it resolving or increasing some of the major hurdles that cannabis companies have faced with regard to capital raising?
Sure. Yeah, I find that up until now, of course, pontificating about politics with respect to cannabis has proven to be not a good exercise. However, if we look at Trump and his administration or presumed administration, seems to be very pro-cannabis, right? A lot of pro-cannabis folks. So logically, I think one would assume that this is a positive, at least from the purely talking about the legalization of cannabis here. If we think about the banking and financing issues that we're so fond of talking about, most of it can be traced back to one very simple issue, which is obviously it's federal illegality. So clearly, with the stroke of the pen, that a lot of those problems can go away. I think on the financing front, though, and then this is something we could get more into. I know some of the questions that we discussed. Some of cannabis's financing issues will not be solved, actually. And I do think it's an oft repeated myth that like if we just had reform, if we just had legalization, that it would actually miraculously solve the banking and financing issues for cannabis. And I'm not so sure that's true.
Yeah, I agree. It's not a panacea. There's
Yeah.
still myriad problems to work through.
Speaking of capital raising, though, there has been some recent news, and I wanted to touch on that for a bit because it's kind of like a tale of two cities. And so we had GTI, who scored a pretty big financing win, as well as Story Cannabis.
Yeah.
I think there was more of a real estate deal. Small companies, however, they're folding like left, all over the place. People are going out of business. Who decides who gets the deals? What's your perspective, on some of the challenges and obstacles out there for your smaller cannabis companies?
Yeah, and this is kind of what I started to touch on a little bit on the previous question. So if you think about your typical cannabis business, uh, arguably its most valuable asset is the license, which can't be liened. Then you have things like inventory, which again, that should be obvious, right? And look, even if we remove federal illegality out of the equation, what's the value of that license? What's the value of that inventory? And especially if it's perishable type of inventory. So I guess where I'm going with this is even if you took the word cannabis out of the equation, or you took the word, you changed the status, let's say, of its federal status. Today, can cannabis be financed if it was not federally illegal, if there was not the mental blocks, et cetera, et cetera? Well, I would posit that it actually would have the same challenges because of some of what I just mentioned, right? You can't put a lien on the license. There's essentially no value to that license, meaning from a trade value perspective. So, Sparky, to your point, if you look at some of these deals that have been done, so in 2024, roughly $980 million of what's considered new capital into the cannabis space, the vast majority of which was debt capital. And in fact, most of that was earmarked for refi. So in other words, to call it new capital is probably also not necessarily true. And again, to your point, a lot of that went to, the big names. Let's use that phrase, right? So why does why can GTI get $150 million of bank-led debt facility if, mom and pop Peter Sue LLC cannot. Well, it's because of what I just mentioned, right? Like if you look at a single shop, single license holder, um, the fact is that's not a very bankable piece of credit. And I think the issue that we look at when we think about that is that like, well, that's going to further divide, right? The haves and have-nots. So in other words, GTI can have cost of capital sub 10. Peter Sue is going to borrow that money at 18%.
Yeah. It's definitely, we've seen it with many of our clients, just how difficult it is to even secure the debt capital. It's not easy coming from any direction. But I think it is true, especially, as you outlined, the license being the most valuable part that you really can't include as a true security, I would say, for the lien or for the loan.
Yeah, yeah.
It presents all kinds of problems.
Yeah, I mean, that's not necessarily a cannabis specific thing. And I'm actually fond of saying this that like, look, it's not, but let's not go crazy here. Like, not these things are not necessarily unique to the cannabis industry. There's lots of industries that have similar structural challenges. So, say you compare it to alcohol. Um, so, a liquor store has the same exact problem, right? In most states, you can't put a lien on the license. And even if you could, what is the value of that license? So just to give you a comparison in New York versus New Jersey, in New Jersey, there is a clear way to do that, and I know almost exactly how much I can get for that license. It's about $140,000, right?
Uh-huh.
So if I lend money to a liquor store, I know that I have a floor, right? If I lend them 200 grand, I know that I'll at least cover $140,000.
Got it. Got it. That
Yeah.
makes sense.
It's challenging too, though, because in the industry, we see a lot of volatility. We see volatility in the price of shares of the publicly traded MSOs. We see volatility in terms of what a buyer and a seller are willing to come together on for a license acquisition. And then again, just in the price per pound of cannabis. How do you think all of that volatility plays into company valuations, both for public as well as for private? And how does that affect their ability to secure funding from a banking perspective?
Kerry, you said it perfectly. I don't have anything to add to that. That's exactly it. I heard somebody smarter than me once said this. There isn't a cannabis industry per se. There's 40 cannabis industries because every state is different. You've got medical stage, you've got adult use stage, you have some states that are both. Everyone has a different regulatory regime. Every state has a different regulatory regime. So even when you think about an MSO, the biggest pubcos that we have in cannabis, the reality is they operate as whatever the number is, 15 different silos, 20 different silos, meaning depending on the number of states they currently operate in. So if you were, and we saw this play out recently when there was that proposed merger that didn't that wound up scrapping, right, with Columbia Care and Cresco. Um, just overlaps and licenses, different markets couldn't do certain things, et cetera, et cetera. Um, so yes, that valuation, I honestly, I don't envy the CFAs of the world trying to dig through one of those analysis. So Kerry, my hat's off to you.
You want to get Sparky riled up? Just say, just say
I do. I
adjusted
would love
EBITDA
to.
and see where it
Yeah.
goes.
Don't start. But I wanted to ask you about vertical integration. There's a lot of folks like in California where they're talking about we need to go vertical either to get investors or to kind of stabilize our business. But in the grand scheme of things, I mean, I can only think of one industry or group of companies that is vertically integrated from raw input to consumer retail, and that's petroleum. But outside of that, nobody that I'm aware of stretches that entire. So, how do banks evaluate the risk for what is, in my opinion, a really poor plan of action? I mean, it's just not a smart thing to do on a bunch of different levels. I know a lot of people will not agree with me on that, but nonetheless, how do you look at risk when you talk about being this vertically integrated in cannabis, or how do you view that as a bank?
Well, so understanding obviously that what I'm about to express is my own personal opinion. I don't want to make that sound like this applies to the industry writ large. However, I'm gonna let you in on a little banking secret. We have this saying, don't lend money to someone that needs it. Now, it's meant to be a joke, obviously, but it is allegorical in the sense that it teaches a new banker a very basic lesson. The way banks do underwriting, the way banks look at credit risk, is actually very simplistic. We probably don't go that deep, quite honestly. Um, it's almost purely based on the numbers. So in other words, while what you're saying makes a lot of sense, and yes, when I look at one of these situations, I like to peel that onion and understand what the business model is, et cetera, et cetera. And yes, all of that kind of enters the conversation, but the reality is, at the end of the day, it is about the numbers. We come up with, say, a debt service coverage ratio, DSCR, and the basic question that is being asked is, can they afford the debt? How do we get out of the loan when should it go bad? So again, circling back to the earlier discussion about collateral, licenses, et cetera, right? So sure, we worry about how the business runs, what the business model is. And yes, it's possible that you have someone that says, you know what, I don't like these vertical markets. But the reality is, if we look at the numbers and it works, we think they can. We know based on the numbers they can afford the debt. We see a clean way to get out of the loan should it go bad. That's really like 98% of the conversation.
So that's true from the commercial banking perspective. Would you say that private lenders or other non-traditional financial institutions have approached the market in a different way? I know they filled the void left by traditional banks, and I'm curious to know if they have a similar approach to how you just described, or if they're doing something different to get some of the fundings that we've seen over the past year fully
Definitely,
executed.
definitely, and that's a very insightful question. Obviously, from a commercial lender perspective, it works very differently than if you think about these private lenders because they approach it almost more like um, they're really closer to an investor in that particular venture, right? And then that's where you see a lot of the equity linked debt deals, et cetera, right? So I do think that here, and it's sort of interesting, Sparky, you talked about this before, where like some lenders might feel like this becomes almost like a personal philosophy question, an investment thesis. Some folks will feel like, well, I like vertical integration because I know that my borrower has a lot of control. But now, as you know, like the asset light model has become a hot topic, right? So whereas once upon a time it was like unheard of. I remember when the first few brands came out that were talking about this like asset light model. Honestly, some people didn't understand it. Like, what does that mean? If it's asset light, there's no asset. Why would I lend to? Why would I invest in something like that? Now it's a hot topic, right? Because investment theses change. Um, so to me, I think that's kind of a personalized question. Somewhere along the line, someone has said, "I like this, I don't like this," etc., and then that eventually filters down into an investment thesis, into a lending philosophy, etc. But Kerry, yeah, to your point, if we look at some of the private lenders, and look, this is public information, right? Like IIP, Chicago Atlantic, they have a very clear investment thesis that they've laid out. And yes, they talk about limited license states, vertical integration, et cetera, et cetera. From their perspective, it makes a lot of sense. You have a borrower that it has control.
Yeah, I could see it definitely from the control angle. I could see where that would definitely make some sense. Um, Going to just for a minute on that asset light side of the house. So I would say like Old Pal famously is an asset light
Yeah.
company. Are banks looking favorably at lending to asset light companies these days? Is that kind of a new thing? Because I hadn't really heard that before.
It depends. Honestly, it's a little bit of a double-edged sword, right? So on the one hand, asset light, so obviously they don't own licenses. They generally don't have facilities, properties, etc. So literally asset light, right? They're typically they're organized almost more like a branding, like a marketing company. Um, so on the one hand, not subject to 280E, so very light on the expense front, favorable tax structure, et cetera, et cetera. So where I'm going with this is they tend to be more profitable, or they have an easier path to profitability.
Yeah.
On the other hand, asset light literally means there's no collateral, right? There's no asset for us to attach ourselves to. I think that that'll be challenging for any commercial bank most commercial banks are what's called cash flow lenders. So again, if we think about it at a very simplistic level, we just purely look at free cash flow and we come up with the formula for what this business can conceptually afford. But
Mhm.
when we think about the exit, that's where the problem is for an asset light model. Um, Now, I still think that it's possible that you'll do something for them. It just may lower the ratio of the lending amount, or just purely as a cap. Like, okay, we won't go above X.
And so Kerry had just brought up private lenders and non-traditional financial institutions. Would you say are some of them filling that void where maybe commercial banks are not necessarily interested in asset light? Would Are private lenders and non-traditional financial institutions, are they a little more open to those types of situations?
Definitely, definitely. But again, in an asset light model, um, for the private lenders, they essentially have the same problem, right? How do you get out? What's the exit? Because you do have to contemplate this idea that the loan, hey, could go bad. And if it does, how do you exit that loan? Whereas the license holders, the verticals, et cetera, there is, however complex it is, there is a way to get out of that loan. The asset light models are very tough to exit should it go bad.
And all of it, whether you are plant touching or ancillary, it's still expensive to do business,
Yes.
to have banking relationships. I know even for Supercritical with our bank, whom we really enjoy working with, it's still very expensive for their compliance charges that they give to us. I'm curious to know, with it still remaining federally illegal in the U.S., how do banks and financial institutions ensure compliance while providing the services to cannabis businesses? And how expensive is it for banks to do that monitoring? Because I know as a customer, it's very expensive to maintain the relationship.
So Carrie, I want to pay you a little compliment here. Believe it or not, I think you're the first person to actually ask me the second part of that question. How much does it cost the bank?
Yeah, I'm
Um,
so curious. I like to know where my money's going.
I'm making the assumption that most people think that based on the fees, that the banks are just killing it, with cannabis, right? But I'm sorry. Let's back into the question a little bit. Um, so what is and I'm sorry, I know this is a dumb question, but why is cannabis banking a problem? It's federally illegal,
Illegality.
right?
Yeah,
Yeah, that's start there.
for starters. When people don't pay their
um,
bills, that's another problem.
go ahead, yeah,
Oh.
that's a whole other question. Okay, it's federally illegal.
That's a whole other episode.
It really is.
Okay, so it's federally illegal, and in a fairly literal sense, the system is designed to keep that from happening, right? Like there's so many different regs and acts and buffers to prevent. Well, if you are moving money in a business that is federally illegal, so in other words, you're selling a Schedule One drug, right? By definition, proceeds of that business is considered money laundering. And the financial system is literally designed to prevent that from happening. So how does cannabis banking happen? So you're familiar with the Cole Memo. Um,
Mhm.
the Cole Memo then trickled down into a number of other federal agencies who essentially adopted its language and said, well, this seems like a good stopgap, right? And the banks did that. They did that exact thing. In 2014, an agency, FinCEN, the Financial Crime Enforcement Network, released the very cleverly named FinCEN 2014. Um, and if you see it, it is a literal copy and paste of the Cole Memo. But Carrie, I think I've seen that cost change a lot, decrease a lot over the years. I remember when I first started, it used to be several $1,000s for, a licensed cannabis company to have just a
Mhm.
basic checking account. and came with heavy restrictions, right? Like the bank wouldn't do wires, wouldn't do ACH. Like it was literally just a place for you to put cash into the bank. Today, I mean, that cost is down into the mid several $100 range, and I want to say almost full service. Like you're able to do wires, you're able to do ACH, et cetera, et cetera. But expanding on that SARS report, again, FinCEN reports, and this is an official statistic. You can like look it up. They believe that there are 800 financial institutions banking cannabis in America. So let me ask you guys. You guys are veterans. Um, you think there are 800 institutions banking cannabis?
No,
No, I don't think it's
that'd be a
anywhere
hell
near
no.
that. Yeah,
Yeah,
yeah.
yeah. Well, to put it into perspective, there's something like 10,000 financial institutions in America, right? So even at 800, even if they were right, that's still less than 10%. So it's not a terrible estimate, but why is it so far off? Well, because they purely base it on SARS filings. Um, so in other words, you are an institution, you're required to file a SAR. If you continuously file SARs on the same customer, so you're limited or your priority, obviously not a termination because that suggests you terminate the account.
Mhm.
Um, so in other words, you every month I'm giving you the same report. So in other words, I know this is a cannabis company. I'm filing SARs on them, and I've obviously continued to bank them. So they say you are knowingly, willingly banking cannabis. So again, their number is 800 financial institutions. Here's why it might be misleading. In fact, I'm sure it's misleading. One, a bank will err on the side of caution. Because there is a downside to not filing a SAR that I should have filed, but there's no downside to filing a SAR that I shouldn't have filed.
Okay, that makes sense.
And believe it or not, there is no textbook definition for what is or is not a cannabis business. So, Kerry, you brought up the fact that even your account, and it sounds like I'm making an assumption here based on what you just said. It sounds like your bank treats you as if you might be a cannabis related business.
It absolutely does.
Yeah.
And we pay $300 a month in fees just for that luxury.
Yeah, and yeah, when we went, there were like 3 tiers of marijuana-related businesses. Tier 1 is plant touching and is really expensive, and Tier 3, it's we get most of our income from cannabis businesses. Ipso facto, they consider us marijuana-related, and at the lowest possible level, which they call Tier 3, which I believe is arbitrary. I think most banks use a 3-tiered system or have, but their definitions kind of ebb and flow between institutions, which has been my experience.
So not to sound like a sales pitch, but actually I would treat you as a quote unquote regular business. So we would call it an indirect. So we wouldn't charge you that 300, not to sound like a sales pitch, but if you wanted to, we could save you that $300
Hello,
a month.
Hanover Bank.
Well, there we go. Hello, yeah, it adds up.
Yeah. No. So we would actually just, charge you quote unquote normal fees, meaning are you doing ACH, are you doing wires, things like that. So there would be no cannabis fee in your case. Now, mind you, that's based on my understanding of your business, et cetera, right? But anyway, so if you're considered a cannabis business, and you mentioned I'm the treasurer of Asian Cannabis Roundtable, so I run our accounts. I've had my accounts closed like 2 times already. So in other words, a variety of banks considered Asian Cannabis Roundtable, which is a non-plant touching, education, business networking kind of group, that also probably garnered several SARs along the way. Thus, you got counted, Asian Cannabis Roundtable got counted. Now take that, multiply that by, every organization, every technology company. Dutchie, I'm sure, is probably labeled a cannabis related business, even though you might argue they're not, right? So the point is, there is no textbook definition for what is or is not a cannabis business. Every institution essentially makes their own determination. You suspect cannabis related activities. How do you define that? It's up to you. So, and because we will err on the side of caution, that's why so many SARs get filed. and thus so many financial institutions get counted as part of that 800. So most insiders, and I'm gonna do air quotes here, think that the number is probably closer to about 100. So 100 financial institutions across. Keep in mind that's across the country, right? So every legal state.
I'm curious to know from your perspective, Peter, what do you think is the most supercritical factor facing the cannabis industry today?
Well, actually, I was being slightly facetious, but we did just talk about it. I actually do think that we're at this inflection point because you know how for years and years people predicted that cannabis beverage would be the next big thing, but it never happened, right? It never happened. But then suddenly we had these hemp-derived beverages, and guess what? It's the next big thing. But is the cannabis industry, I guess, benefiting from that, right? Because what's interesting is what I think it also proves is that once you take it out of the dispensary and put it into traditional outlets, apparently that's how you win the beverage game, right? Which makes a lot of sense. But my point is now it's not a theory. Like we have real data now. Um, that can be a supercritical juncture, right? We are at a supercritical juncture because if we're going the hemp route, yeah, there's a possibility that these licenses, these cannabis licenses, are relatively valueless.
Well, I think even more broadly, it's a matter of distribution and how you're getting the product to the end consumer because the hemp side has such an advantage over the traditional market and THC beverages. So it's the access to it, I think, that has really put some wins into that, behind
Yeah,
that.
yeah. I mean, Sparky, you brought up CPG experience.
Hmm.
If you're a person that has rock star CPG experience, would you rather go work at P&G or would you rather work in cannabis? Um,
Speaking as that person, I'd rather work in cannabis, but no, I get to where you're going. I mean,
But
especially
his
now.
bank account says differently.
Yeah, so exactly. My bank account says is P&G on the phone.
yeah, yeah, yeah.
That's what my bank account says. Yeah, no, it definitely it's tough sledding right now. But going back to that beverage, I think the other thing to really look at is Minnesota. They're allowing on premise right next to alcohol, and that's kind of always been our thesis. We tried to put together a beverage project out in Colorado. And that was really it. It was like, you have to meet people where they're at. I
Yeah,
don't want, I don't want to go to a consumption lounge with my friends because not all my friends consume weed.
yeah,
And then if I want to go to the bar and I don't drink, but I love weed, I either have to do all my medicating outside or, it's still just kind of clumsy. You can do it, but it isn't great. And now that, I look at Minnesota as, hey, eyes on that because I think that's where you're seeing a lot of this. Hey,
yeah.
man, cannabis beverages are going through the ceiling. Peter, thanks a million for taking the time to spend with us today. How can people get in touch with you and learn more about Hanover services?
Thank you. I guess, but the easiest way would be to reach out to me on LinkedIn. I'm active on LinkedIn, Peter Sue, with a lot of letters after my name.
Yeah, that is
And
a lot of letters.
I'm good at tests. I take designations.
And then is Hanover, what's the Hanover website?
Oh, sure. It's hanoverbank.com. And yes, I would encourage you to reach out to me. I'm happy to answer any questions. Happy to help.
Awesome.
Thanks, Peter.
Yeah, thanks again for joining us on This is Supercritical. And to everybody watching, you can check out all of our podcasts at supercritical.agency. And please take advantage of Supercritical's complimentary 20-minute consulting session with our cannabis experts. And please join us next month when Supercritical brings you its 2025 industry roadmap for the year ahead. That's the last thing I got to say about 2024. Just fumble it right out the door. I'm in Arizona now, and I'm cantankerous. We could use that.
So what is making you cantankerous these days?
Oh, well, it's right now, it's just for me, it's uh, stagnation. I mean, just nothing's happening. It's in my craw because I just know the thing that's frustrating me, and this is just in my head. I know that there is so much potential out there in this industry, and unfortunately, I just don't feel like the proper, and by proper, I just mean people with the right amount. I don't think the opportunities are going to the right people, and feel like, when we did this call with Peter, that the banks are making all the wrong bets, and that it ultimately hurts all of us because now nobody wants to invest in cannabis. And there's some good products out there. There's some good opportunities, and it's just not happening, and it's really frustrating.
For me, it's the sameness of everything. Like you're saying, it's stagnating, but there doesn't seem to be much innovation. There doesn't seem to be much imagination. And especially on the product side, I saw something recently in Chicago where they're having now a cannabis infused jardiniere. Like, really? Like, unless you're buying that as a novelty gift for someone, like, who actually wants to put THC in their jardiniere?
And that's the thing that, again, since I've come here to Arizona, I've been researching the landscape, what's going on out here. And, and it's the same old shit. Half of it is the same companies. It's the MSOs that are in here, and they've got all their, usual products. But when you look at what everyone else is doing, there's nothing really different. There's nothing really innovative. I can show me one product in any state, and I'll show you at least 2 or 3 other companies in the same state basically doing the same product, selling it the same way to the same people for the same price. The only difference is the flavor, or the only difference is the strain. And it